Can I get a home loan with no deposit?
Is the government going to give you some free money next year?
Do I have to pay lender's mortgage insurance?
What? How? Why? I have so many questions!
Well, today we're going to talk about the new homeowner scheme that could potentially save you thousands of dollars in lender's mortgage insurance. Nados, let's get right in. Hey guys, before we get into this video, if you like it, make sure you give us a thumbs up or subscribe below and leave a comment. We reread and we reply to every single one. Nados, you're pretty excited today. What's going on?
I turned on the TV and I saw some news that got me excited. It's looking like first homeowners will be able to get into the market and save some serious cash.
Yeah, Nados. So on Sunday, the government came out and said they're going to be launching a new guarantor scheme next year in early 2020, which means the government is going to help out people that are looking at buying their first home that have smaller deposits. So in other words, if you only have a 5 or a 19% deposit, if you've got less than the 20%, the government's going to basically guarantee you and they're going to help you get into the market way quicker.
So hang on a minute, I don't need mum and dad to help me out to get in my first home now and avoid paying that lender's mortgage insurance there, Jaden?
Yeah, so we've covered lender's mortgage insurance in another video, which we'll put below or above. So lender's mortgage insurance is an insurance that's there to protect the banks, which we've talked about in the past, and you have to pay it if you have less than a 20% deposit. But with this new first homeowner scheme, the government's going to sit in there instead of the lender's mortgage insurer, and it's potentially going to save you, as a first home buyer, tens of thousands of dollars. Pretty good, right? So practically the way it's going to work is if you have less than, say, a 20% deposit. Now, in that case, if you have a 20% deposit, you don't pay lender's mortgage insurance. But if you have less than a 20% deposit, say in the case that you have a 10% deposit, you might pay $50,000 on a $500,000 purchase. And generally speaking, you would pay a fee to the lender's mortgage insurance. In the case of the government and the first home buyer scheme, you're not going to have to pay that lender's mortgage insurance, and you'll still borrow the 90% loan from your bank, but the government will basically guarantee the bank and you won't have to pay that lender's mortgage insurance fee, which can be huge. As a quick example here, if you're looking at buying a $400,000 house in Queensland and you only had a 95% loan, you ordinarily could pay up to $17,000 in lender's mortgage insurance. So yeah, this is going to be really powerful and be really exciting for first home buyers looking to get in the market.
But is it too good to be true?
Yeah, Nados, there are some limitations. So the government said that they're only going to allow up to 10,000 first home buyers per year access to the scheme. And last year there were about 100,000 first home buyers in the market. So it's only 10% of the market that's actually going to be able to access this product.
So Jaden, is there any more downsides with this first homeowner scheme?
Yeah, one thing that's a potential downside is there's not a lot of information about the scheme right now. So from what the government said, they're going to guarantee the loans instead of the lender's mortgage insurer, which is pretty cool. Because in Perth and WA, there's actually a Keystart scheme where there's like a co-ownership model where the government owns a bit of your property to give you a bit of deposit. But in this scheme, the government's basically going to guarantee you. So that's pretty cool. But we don't know if there's going to be limitations on the property prices. Can you be a first home buyer and buy $1 million property? Or are they going to put limits and say maybe it's only $500,000? Don't know, to be seen. Second thing is the interest rates on the first home buyer scheme could be slightly higher. So some banks have come out and said that they're going to consider these loans a bit riskier than traditional lender's mortgage insured loans. So it could mean that as a borrower and as a first home buyer, you're going to be paying slightly higher interest rates than what you would have otherwise had to. And the third thing, not dwelling on it, which could be also a good thing if you already own a property or if you're getting quicker, is that property prices might increase. Yeah, so interestingly, I was doing a bit of research on this and the Deakin University published a study in 2012 and they looked at the effects of the original first homeowners grant that was introduced from the year 2000 up until 2012. And they found that the first homeowners grant actually increased property prices by over 18.8% or over $56,000. So, it's good if you own a property and it's good if you get in soon, but if you leave it too late, you could actually be buying a property that's gone up even more in value. So, it's a good thing and it's also a bad thing, I guess.
So guys, it is early days. And on the upside, we're not quite sure where the banks are going to land on this one. The good news is it will look like the smaller lenders are going to be assisting with this scheme, which to your earlier point there about the interest rates being high, might actually be the other way and be more competitive because the smaller guys will want to get involved.
Yeah, I guess the other thing, and there is a lot of uncertainty. It's only been out for a couple of days. The Labor Party has come out and said they're going to match it. So it doesn't matter which way you vote. This looks like it's going to be on the table from next year. So it's pretty exciting to have that as a way to get into the property market where you might not have otherwise been able to get there or be able to save up your deposit or rely on your parents.
And the third point is it's going to help you get in the market quicker and also save you a lot of cash in the lender's mortgage insurance, which you'd otherwise pay without this scheme.
Yeah, so even if you've got a 5% deposit, 10% deposit, the lender's mortgage insurance can be tens and 20 of thousands of dollars. It can be huge. So this can save you a bunch of money, but not only that, if you get in early, you might get in before the prices start to get pushed up and there's a lot more competition in the market. So guys, that's it on the first home buyer scheme. Not heaps of details, but from what we can see so far, it can be very exciting if you're looking at buying your home and you might not quite have a huge deposit. Nados, any questions? Where can everyone get in touch?
Hit us up at huntergalloway.com.au, and as always, thanks for watching.